As the market continues to climb to higher highs, we are all, as investors, facing the same exact challenge. And it doesn't matter if you're Ray Dalio, Warren Buffett, or of the Charlie Munger status. The name of the game for all of us is where exactly to find discounted investment opportunities. And today, I have you covered with 3 under-the-radar flying dividend stocks to add to your watch list right now. So, are you ready? Now, before we break down each of today's picks, I want to remind you that investing isn't supposed to be fun. So if you feel a gambler's high, reconsider your strategy. And on the other hand, keep in mind that all the stocks that I talk about must meet certain criteria to deem them as quality investments, which all come down to really 3 major key factors for me: strong brand names, exemplary leadership teams, and very clean balance sheets, meaning little to no debt. And out of the thousands of companies that are out there for us to invest into, I can assure you not all of them are the winners. So focus, and moreover, be patient on the long term to reap the real dividends of long-term dividend investing. With that, we're going to dive into Accenture, ticker symbol ANC, up first, which is a management consulting, technology, and outsourcing company offering a wide array of services from DevOps, application modernization, enterprise architecture, software engineering, data management, and complete automation. Now, with the future being tech-oriented, I remain bullish on tech opportunities, especially when they're trading in the red zone, like right now with Accenture, trading for just $329 per share, which is down by almost 5% year to date. But here's the real deal with these tech companies. The power is in the long-term investment, as we zoom out to see over 384% worth of share price appreciation. And in terms of Wall Street's take, well, analysts forecast upside with Accenture coming up to $341 per share, while plenty of hedge funds have started or at least added to their positions, loading up on more shares as of last quarter. Now, typically with tech, you get a lower dividend, under usually 1%, but that's not the case here. We see a dividend yield coming in at 1.57% that only continues to grow at an average rate there of 10% year over year, while maintaining a solid track record of uninterrupted dividends for the last 18 years now. But if you want to stray away from tech and I guess play it a little bit safer and go after a little bit slightly higher of a dividend yield, check into Honeywell International, ticker symbol HON, which is a whale within the aerospace technology arena, but also now has segments within building automation, energy, and sustainable solutions, as well as industrial automation in the United States and all throughout Europe. Of course, these are all avenues in which we just continue to see more and more of a focus from governments and investors across the board, which is key to note. But stock-wise, right now, we have Honeywell down on the year by 3.5% and trading for $199 per share. That's down from almost $220 per share back in July. But zoom out with me to see Honeywell has been soaring over the years. Over the last decade, over 168% worth of share price appreciation, continues to attract analysts with bullish projections coming up to $227.36 per share. It's about 14% worth of upside from here. But until then, we're going to enjoy the dividends with Honeywell, thanks to a 2.17% dividend yield that has been continuously shelled out now for the last 31 years, all while growing their dividend by roughly 9% year over year. Now, investors, 2 down, 1 more to go, and it's actually the one that I'm most bullish on for today. But before I actually share it with you, I want to ask for your help directly right now by subscribing to the channel if you're not already subscribed. You see, my actual goal here is to keep this channel growing, which would really just trigger me, after seeing all the growth, to put more attention on the channel, knowing just how many investors it's actually helping out there. Of course, in exchange, you have my commitment to produce more stock ideas, share more macroeconomic insights, and just continue on with my Masters of the Market series. Now, while you're at it, tap on that thumbs up button so I know that this is the exact type of content that you like and want more of. With that, let's go ahead and get to this opportunity with Deere, John Deere that is, ticker symbol DE, which is in the business of manufacturing agricultural equipment, tractors, and machinery on a global scale. Now, I want you to understand that as interest rates have been elevated, customers of Deere have actually held back on major purchases like those big green tractors, which has impacted Deere's bottom line. Ultimately, we're all waiting for interest rate cuts, which would give way to cheaper spending, if you will. But right now, with this economic environment, we can take advantage of Deere. It's down on the year by over 6%, trading for $372 per share. That's down from $312 back in May, and with a beautiful PE coming in at 12.9. Now, best yet, in the stock share chart, we can actually see that we had some spikes when interest rate cut talks were taking place. But zoom out to see over 428% worth of an appreciation, meaning a beautiful harvest over the last decade by Deere. And this is all while analysts just continue to predict further upside, over 10% expected, hitting $413.64 per share, while hedge funds remain long on this investment, planting their seeds right now with Deere loading up on more than 221,000 shares worth of Deere last quarter. And until then, we're actually going to get to enjoy the 1.58% dividend yield. It's small but mighty, with a 13% growth rate over the last 20 years while maintaining a 30-year dividend streak. Now, investors, Accenture, Honeywell, and Deere have been my picks this week, but I want to know your picks, so comment down below all the dividend stocks that you have in mind or have been watching. Catch more insights right here, but before you click away, go ahead and tap on that subscribe button to actually join this financial freedom journey.